Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The theme we have been following closely is the Japanese carry trade unwind. JK, even a few months back, had warned of the consequences of this unwind, and what followed was also its ripple effect on other currencies. Chinese yuan also saw some solid appreciation against the USD yesterday. Now, on the data front, yesterday we had the US GDP, durable goods orders, and the jobless claims. Good morning, JK. Do you feel the current appreciation of both yen and yuan are done, or do you feel there is still some scope for some more appreciation?
Good morning, Swaraj. Yes, I think yesterday we important support level at 152 half on the dollar yen, and there are several reasons driving the yen higher. You see rate cuts happening almost everywhere now. Fed rate cuts at least two this year. Europe has already cut, will be cutting more this year. Canada has cut twice. Then UK, very close call on August. So there is a bit of reduction in the carry advantage of these currencies against the yen. That's leading to yen appreciating as a profit taking, and also the big fall in the tech stocks in the US after very sobering results from some of the majors has also led to unwind there and profit taking in yen related carry trades in the stocks as well. Now, but this move got some halt yesterday after a strong GDP number from US that came at 2.8% versus 2% that the market was anticipating, and 1.4% was recorded for Q1. We had seen the yields move up, particularly in the 2-year, almost 10 basis points higher from its low of 4.34 to end at 4.44. Another factor that's also probably helping the dollar to recover against yen is the latest polls that show Kamala Harris getting a 2-point advantage over Trump, in the presidential race. And as we all know, Trump's policies call for softer dollar, particularly against yuan and yen, and possibly some, relief for the yen bears after this poll. Of course, these polls can be overshadowed by what the results come in some of the key states, which is very eagerly look forward. It's too early to say one way or the other, but definitely if the Democrats come back, I think it will be a status quo policy, and you will see gradual rate cuts and gradual moves in the currencies rather than in the big moves that we tend to expect when Trump is back in power with all the tariff hikes and all those things. So, yes, on the US data, more numbers were there. Durable order goods fell quite a bit at 6.6% month on month. Not really encouraging because that's already shown up in the manufacturing numbers that we have seen of late. Claims for the weekly joblessness were lower at 235,000, again proving that the seasonal factors had pushed it to 245,000 last month. Now, also on the European side, we had the IFO numbers from Germany that was not encouraging. It has fallen steeply after rising for first 3 months of this year. There are now again doubts whether Germany can sustain the recovery that it had shown in the Q1 of GDP coming higher than expected, and there is a lot of concern that if the China and US economy continue to slow down, that can actually impact the German economy recovery as well. So that's the reason why euro actually has slight pressure with also the euro yen being sold by the investors as once again carry unwind that we are seeing. Looking ahead to today, we have the PCE numbers that comes after 2 months of soft CPI. these numbers are expected to show a slight increase that can mellow the rate cut expectations. However, I do see two rate cuts definitely on as a par for the course as far as US Fed is concerned. On the rupee, we had some outflows from FIS yesterday, and that put the rupee under some pressure, and we saw even 83.78 being traded in offshore trade, but because onshore we did not cross 83.72, and the central bank was quite active in offering dollars. I think Indian markets have held up well despite the sell-off in the global markets and the big carry-on events that we saw yen related. Also, the recovery in the yuan is also keeping the rupee moves somewhat subdued, because yuan almost recovered 0.8% after the yen moves, and there were also rumors that state-run banks in China were offering dollars. So that also kept the rupee from weakening much. And unless we see the outflows from FIS intensifying, don't see INR breaching 83, 75, 80 range in a hurry. Thank you.
Thank you, JK. And just quickly summarizing the US GDP, it surprised the markets coming in at 2.8% against 2% expected. And I think that was also a dampener for the yen carry trade unwind story, at least till the time we get further data. The presidential race in the US got a lot more interesting, with polls indicating Vice President Kamala Harris doing well against former President Trump. German IFO survey has fallen steeply, dampening the economic recovery theme going on there. And of course, today, the US PCE will be in the limelight, and a slight increase may dampen rate cut bets, which the markets are placing. For the rupee, FI outflows did lead to the onshore rupee trading weaker, but it did not cross rupees 83.72. And as JK mentioned, Indian markets have held up well despite the carry trade unwind. And of course, the yuan cooling off has also helped the rupee stay as where it is. That's it from us today. Thanks for listening. Have a very good weekend and tune in on Monday for the latest in the financial markets.